What's up, everybody? It is Monday, November 23rd, Thanksgiving week. So it's going to be a short week. Trading's going to get thin as we progress towards Thanksgiving. So be careful, and I hope everybody's going to have a nice Thanksgiving. I know with this COVID going on, it sucks. Man, it's not like a regular year, but you know, those are the cards we've been dealt, as they say. So an interesting day today. Couple of things I want to talk about. Number one is gold. We saw gold break down through some important technical support. You know, we've been seeing gold now for a number of weeks bounce off this 1850 level. Today it went through. We got down to, I think the low was like 1828 or something like that. There were a lot of sell stops clustered below the 1850 level, so it's not surprising that we had this break. I mean, the market usually goes for where the stops are. One thing I did notice, which was kind of curious, was that in the most recent week, according to the CFTC commitments data, producers were aggressive sellers last week in that tight range, you know, that we had below 1900. Now, that was the first time that I've seen them as short sellers below 1900, usually below 1900s, and I've been telling you, like every time we get down to 1860, 1850, 1870, they've been there as buyers. Wasn't the case last week, at least the week ending November 17th. That would be the data through last Tuesday. They were adding to short positions. They obviously saw something in the cash market, and gold broke down. Gold is still in a bull trend. This is, you know, part of this ongoing correction that, you know, was a consolidation phase. Now it broke down a little bit more, and I wouldn't be surprised to see maybe some of the speculative participation get short. Maybe small speculators, maybe even managed money get short. So got to pay attention to that. But I think 1820 down to 1780. Probably good support, longer term support for gold. The other thing that was interesting is the dollar. We saw a pretty sharp short covering rally, at least for, you know, a daily rally in the dollar. You know, the dollar's been, there's been a lot of bearish commentary, technical chartist kind of people saying that the dollar index at 92, if it breaks that, especially on a weekly close, that's going to trigger more selling. So a lot of short positions built up in front of that 92 level in the dollar index and in some of the other currencies, and that it didn't break. And when it didn't break, there was a rush for the exits, and you got this short covering rally. Now, I'm going to tell you what I say all the time. The dollar is in a downtrend, and you got to sell these rallies. Like me personally, I love when stuff like this happens because it just gives me an opportunity to add to my dollar short position. And this move will be reversed. We'll end up making new lows. That's going to happen. I mean, you know, this is fundamentally the dollar is in a downtrend. As for the stock market, we saw a good advance again today. Look, bullish sentiment is high. The other thing that I'm noticing is on these tax flows, corporation income tax flows still narrowing year over year. They're still up over last year, but that year over year differential is shrinking. And to me, that indicates we're seeing a slowdown, or at least it's a confirmation of some slowdown in economic activity. So you have, you know, high bullish sentiment, you have a slowdown in economic activity. The one thing you have to pay attention to is underlying all this, very powerful fiscal flows. So I think we can get a little pullback in here, but remember, the fiscal flows are so powerful, the fiscal support is so strong that whatever pullback we get, it's going to be quick, it's going to be marginal in terms of any percentage, you know, pullback, and it's just going to be another buying opportunity. Until we see a change in these flows, and I don't know if that's even going to happen. I mean, it might happen next year with the new administration. Again, we got to see what the policies are going to be. We got to see what gets passed. If we have a Senate controlled by Republicans, maybe not a lot's going to get passed. But until we see a reversal in those flows, the trend of the market is up. So you can play these mini corrections if you want, based on sentiment, based on maybe, some slowing activity economically, but they're not going to last very long. It's better to just wait for the pullbacks and add to your long position. All right, everybody, that's it for today. Hey, today's Monday. I sent out the new edition of MMT Trader, so don't forget, go to my website, pitbulleconomics.com, and sign up for a 30-day free trial. I'm the only one who has an applied approach to MMT. I take the concepts and understandings of MMT, and I use them to invest. Nobody else does that. See everybody tomorrow. Bye-bye.